Hey, this is Matt from InvestiQuant. Today is Friday, August 14th, 2020, and yesterday we saw a pretty quiet session in the markets. The ES ended up putting in an inside day and also a doji, which we had in a couple of the markets yesterday. So a doji, for those who are not familiar, is a day where the opening print and the closing print are very similar. So if you look at a daily candlestick, it kind of looks like a T or a cross. It doesn't necessarily matter as much where the open and close are at. There's a couple different variations if they're up near the highs or near the lows, but generally if the open and close are about at the same price, it's considered a doji candlestick, and it's often associated with a day of indecision. So what I want to do this morning is take a look at that candlestick pattern and what has happened following that candlestick pattern when in a bullish environment like we're seeing right now. So I'm going to set this up in all four instruments. Set up intraday open. Trade type is long. It will exit at the close of regular trading hours, which is 4:15 p.m. Eastern time. Currently, at the time of this recording, we're down just a little bit. We were down quite a bit more earlier in the session, but we've started to recover, and we've got a pretty small down gap that's right about back to yesterday's close, just a little bit underneath it. So I'm just going to put gapping down within the prior day range because we are still down a little bit. And then I'm going to go into price patterns, and I am going to say that yesterday was a doji. So we've got candlesticks that are already pre-made for you to test here in the price pattern section. We've got a doji right there. You can also build your own candlesticks in this location, last open and close. All kinds of cool things you can build with that, but we've got a bunch of them pre-packaged here for you to test. And then in the indicator section, I am going to say that we are in a bullish market environment by putting it above a 10-day moving average and above a 200-day moving average. And then I'm going to click view results. And here we go. So these are the results of going long at the open of regular trading hours when gapping down in the prior day range. So you're opening within the prior day's range, but lower than the prior day close after a doji candlestick that closed above a 10 and a 200-day moving average. Historically, that has happened 92 times in the ES, 99 in the NASDAQ, 103 in the YM, and 101 in the Russell, dating back to 2003. So decent sample sizes here across all four instruments. And win rates on them all just leaning a little bit to the long side. Not super strong, but we are seeing consistent numbers that are leaning on that side. So ES about 58%, NASDAQ about 58%, YM the weakest at 52%, and then Russell at 58% as well. So three of the four right at 58% on around 100 samples. Looking at the average win to average loss, ES pretty similar there. NASDAQ, the average loss is a little bit bigger. Average win, average loss there. And the YM, very similar. And looks like the average loss a little bit bigger in the Russell than the average win. But historically, this one has had a little bit of a lean to the long side, not a real strong one as far as closing above the open, so printing a green candlestick the following session. And this is for gapping down in the prior day range. You know, the gap's not real big right now, so if this was to gap up, these stats would change a bit. You can play around with that by going into the opening filters and changing where the opening location is, making it gap up, or use a pivot zone or something else. Or you could test the gap amount by a percentage of the 5-day ATR points, however you want to look at it. But that would, if it was the gap up, that would likely change some of these stats. So that would probably be worth digging into if you're interested in digging into this further. Good luck today, and we will see you next time.